Howdy folks, welcome to the Daily Coin. My name is Rory and today is Wednesday, May the 18th, 2016, and I have the very distinct honor and great pleasure of welcoming back to the show Mr. John Rubino from dollarcollapse.com. How you doing today, John?
I'm all right, Rory. How are you? Good to talk to you again.
Same here, and I'm doing quite well, thank you. And I was listening to your podcast from last week earlier this morning, and it sparked quite a few questions, but I've got it narrowed down, and I want to start with something that wasn't involved in your podcast, but we're going to get to that in just a moment. And following a recent Federal Reserve public meeting, Janet Yellen met with Obama and Biden in an emergency meeting. There was actually a series of 3 meetings that the Federal Reserve was involved in. And now we learn that the G20 has plans for an emergency meeting this summer, with the Federal Reserve meeting in private with the president and vice president, not to mention what's going on in the UK with the Brexit talks and the growing anger all across Europe. I mean, what do you make of this emergency meeting of the G20 this summer?
Well, I think it would be a surprise if they weren't having secret emergency meetings. The world is kind of spinning out of control here, and
Yes.
Wherever you look and whatever area in which you look, things are happening that have never happened before. The political side of this is just crazy right now, but that feeds back into the financial side. When a society borrows too much money, it becomes ungovernable. And so we spent the last 30 or 40 years borrowing way too much money. Global leverage is at historically unprecedented and absolutely crazy levels based on common sense. And so it's not a surprise that you've got politics spinning out of control with Brexit and National Front being the biggest vote getter in France, and Donald Trump and Bernie Sanders, who were previously kind of fringe candidates, front and center in U.S. elections. So, it's to be expected that these guys are terrified and that they're sitting around conference tables now trying to figure out what to do and coming up with short-term solutions that just make the long-term problem worse, where they decide to push interest rates down to negative levels, which eventually lead to a disaster, even if they buy you another few months of relative stability. And it goes on and on. Everything we've tried in the last 10 years has been experimental and strictly short term, and so the old tools don't work anymore, and they're really struggling trying to figure out what to do next. So I think we'll see a lot more surprise emergency meetings that result in either a report that is strictly designed to calm the markets down without any substance, or surprise actions on the part of central banks or governments that are also designed to calm the markets down. Like after the latest G20 meeting that seemed to break up inconclusively, there was coordinated central bank action as the ECB and the Bank of Japan acted to lower interest rates. Well, that backfired because their currencies actually went up.
Yep.
And so that's what has these guys so freaked out, because they do things that, according to their textbooks, should lead to a certain outcome. And it's leading to the opposite outcome, which means people have lost faith in the system. And when a critical mass of people have lost faith in the system, then it's over for the current set of policies and the current games that are being played. And I think that day is coming, because you're seeing it happen to an extent pretty much everywhere. Let it continue in that direction a little bit further, and more people will pick up on it, and it will be game over.
I think that people like yourself and myself and all of the people that are reporting the truth and have been for a number of years are finally making a difference, and the masses are finally starting to go, wow, these guys are right, and we're being fed nothing but lies by the government and the central banks. And what's going on with my money? Why is this currency not worth anything? And why is unemployment completely? Why is that a lie? Why is my family unemployed, but yet I'm being told that unemployment's at 5%? Are you kidding? Hello? You
Yeah,
know,
yeah,
and I think that feeds right into what you were saying as far as the central banks are losing the faith is waning, if you will.
yeah.
And speaking of which, and this plays into your podcast, John, and retail, as you reported in your latest podcast, is falling off a cliff. And Wolf Richter, who I'm sure you're familiar with over at Wolf Street, is reporting commercial real estate leasing and sales are falling off a cliff. If retail sales were horrific during the selling season, formerly known as the holiday season, and followed by a first quarter disaster combined with commercial real estate disaster, when are people going to start using the words economic recession, economic depression? Are we not in a global recession right now and on the cusp of a massive depression unlike the world has ever seen?
Well, yeah, there are a lot of signs of a slowdown, and retailing is a multifaceted story that's really interesting because it's got technology as well as bad decisions on the part of a lot of big bricks and mortar retailers. But basically, what these guys did over the last 30 years was extrapolate out good consumer spending growth forever, and they built store chains based on that assumption. But as debt increased to unsustainable levels, obviously people can't spend as much as they used to because they've got to pay their debts. It's very basic math and very simple common sense.
Exactly.
And the other thing is demographics. You've got baby boomers aging out of the workforce and retiring now, and that changes their spending patterns, which retailers also didn't take into account. So you've got Amazon and the other e-commerce companies crushing bricks and mortar retailers because they the former just keep getting better and better at what they do, and there's less and less reason to actually clean up and go to the mall now if you want something. You just order it from Amazon and it comes in a couple of days, and pretty soon it'll come in one day. And pretty soon after that, it'll come in an hour. They'll drop it in your at your front door with a drone, so bricks and mortar retailing as a concept is on the way out to an extent. And so you see these big retailers that own all this real estate and they have all these people and everything that they just can't compete anymore. So every single retailing earnings report in this current cycle has been shockingly bad, and then the stock tanks. And this is a surprise for some reason to the Wall Street analysts who had pegged the stock as being worth a certain amount, and now it's worth 18% less just this morning. And that's happening over and over again with these guys. So, and that's happening in the context of a slowing economy. As you said, rail traffic is way down, which means we're moving less and less stuff, and shipping rates are way down, which means fewer imports and exports are taking place around the world. And there's really no end in sight to this because this trend has legs. This is a long-term trend in which consumers took on way too much money and basically haven't stopped taking on too much money. So their ability to buy new stuff, especially frivolous stuff, like what 90% of what is sold out there in department stores really is, our ability to buy more stuff like that is very limited. And if we're going to buy it, we're going to buy it online anyhow. So malls, basically, as a concept, are kind of doomed. They're going to be transitioning into refugee housing or something like that over time. And so they're not going to be places that we go and hang out. It's not going to be an event to go to the mall anymore for the vast majority of people. And so those structures are going to lose their economic reason for existing. And, that's one small side story in a much, much bigger story of global economic collapse, but it's kind of a canary in the coal mine. It's a big industry, retailing. And let it drop into a depression, which it's rapidly doing now, and the rest of the economy is going to be pulled in that direction. A retailing depression won't by itself cause a broader financial crisis, but it can be a domino that falls and knocks down other dominoes and starts the process rolling. So yeah, it's definitely worth watching. And I'm not sure whether it's too late to short the big retailers, but the people who were smart enough to short them a year or two ago are making lots of money right now.
They are wealthy. They're getting wealthy. And you brought up something that to me has been one of the greatest. It's one of the things that I've been following fairly closely for well over a year, and that's the Baltic Dry Index and the Shanghai Freight Containerized Index. Both of those, Baltic Dry Index, from my perspective, represents raw materials going into manufacturing, and Shanghai Freight Containerized Index represents finished goods coming out of manufacturing. And both of those indices are basically dead in the water. They've been on life support for a very long time. And as you pointed out, the shipping rates, which are reflected in these two indices, they're just non-existent. I mean, there's no movement. So once you combine, the manufacturing aspect has dropped off. There's nothing moving anywhere. I can't understand why people are so. I mean, I understand that once you start throwing around words like economic recession and economic depression, that everything changes at that point. So the mainstream media has to be very careful about using those words. But the reality of it is that's what we're faced with, from what I can see. I mean, that's just what I see.
Yeah. Well, I think you could make the case that future historians will date the beginning of the Second Great Depression at 2000 or so, because that's when things really started to fall apart, and we started doing absolutely crazy things to keep it from being noticeable by the general public. If it wasn't for food stamps,
right,
which 45 million Americans now get, we would have soup lines and bread lines.
That is correct.
That rival those of the Great Depression. So you'd have that visual.
Yes.
And the wages stopped going up in real terms for the average American sometime in like the 1970s, and they've been going down ever since. So by that measure, we're also in a depression. And you can look at lots of other measures. And we measure unemployment now with a statistic that's different than the one we used back during the Depression. If you use the same stat that they used back then, we've got depression level unemployment. People are out of work on a scale, and
maybe even
the fact
greater.
that they've been but they've been leaving the workforce, and we don't count people who get disgusted and just give up looking for a job as unemployed anymore. Which we did back then. If we still counted those people, which we should, then we'd be up in the high teens and maybe higher than that, which is really a depression level unemployment. So I think historians, when they sort all this out and dig through the lies that we're being told today, will say that, okay, in 2000, the global economy dropped into a depression, and by 2016 had not yet recovered from it. And so, this is the kind of thing that, as you said, people will eventually figure out.
Yes.
And when they do, phase changes in popular perception happen really quickly. Like, look at on the cultural side here. A decade ago, gay marriage was seen as, such a fringe idea that it was barely worth talking about in polite company. And now it's the law of the land. Boom, it just happened because we changed our perception on that issue, and it just, it became a mainstream idea whose time had come, and we did it. Same thing with the legalization of marijuana and soon other drugs. That was also something that just didn't exist in a legal sense a decade ago, and now it's this freight train that everybody's just getting out of the way of because it's clearly coming, and stuff like that, once it becomes part of the popular culture, once we basically accept that that's the way things should be, then reality changes. And the idea that we're in a depression and that we painted ourselves in a box that we can't get out of with some monstrous crisis, I think is one of those ideas that is coming. And when a critical mass of people figure that out, then they'll act accordingly. And what they'll do is they'll scale back their spending, they'll invest in crisis type investments like precious metals and farmland and stuff like that, rather in a way that is shockingly big. Time comes, it'll take like 6 months for the whole world to change. So, what that means for us as individuals is that we need to be out in front of this. We can't wait until we see if the trend is really firmly in place, because it's going to happen fast, like it did with junior mining stocks here. If you were waiting to see if it was time to get into junior gold and silver miners, waiting for them to bottom, you missed quadruples and quintuples in a lot of your target stocks in just the last 3 or 4 months, because that's how fast things change.
I don't think it's too late on that particular front, but you got to be careful out there. So, with the junior miners.
I totally agree that they're incredibly volatile, and you don't want to bet the farm on junior miners at any given time. But if you were thinking of getting in, you missed a big opportunity here by waiting for some really overt sign that it was happening. You just kind of have to accept that you might have to wait a while with a lot of this stuff. But when the phase change comes, you'll be glad you were in these things. I actually have some junior miners that are up from where I bought them now.
See,
which,
there's a lot of them that are moving.
And
like I said, they're not done. They haven't even gotten started good yet.
No. I mean, over the next few years, these are the .coms of the next bull market. And so I think that now you want to kind of dollar cost average. A year ago, you could have jumped in with both feet. There are still a lot of stocks that are down by 95% from their previous highs and from their fair value, and so they've doubled. Okay, but they're going to double 3 or 4 more times.
Exactly.
And so, and so a lot of these things are going to do stuff that just seems crazy in today's world. I remember this a junior miner called Glamis Gold. I'll tell you a real quick story about 15 years ago, let's say, for $1.50 a share. I bought a bunch of it. And then it went to $3 and I sold it thinking I was really smart because I doubled my money. Well, in the next 2 years, it went to 40 from $3. And so all I had to do was go lie on the beach for 2 years, to make a serious amount of money and just stay away from my computer. But stuff like that is coming again for some of the really high quality junior miners.
Couldn't agree more.
And so it's going to be fun for the people who have the guts to be in these things, these volatile, crazy little stocks right now.
Yep. And speaking of precious metals, COMEX Gold is now 540 plus claims per 1 ounce of gold. The Shanghai Gold Exchange is moving literally tons of physical gold through and establishing a new pricing mechanism for the world. It will take a little while for this new pricing mechanism to take hold, but when it does, I believe we will see the gold exchange rate begin moving to the upside pretty slowly at first, and then in leaps and bounds. What are your thoughts on the COMEX being so far out of balance, John, with the reality and the Shanghai Gold Exchange setting the exchange rate for gold going forward? And how do you see this whole thing playing out?
Yeah, well, the paper gold markets like the COMEX are basically fractional reserve banking systems where you've got an awful lot of claims against a relatively small amount of real stuff. And so, that's a recipe for crisis. Banks have runs on them all the time. And especially back before FDIC insurance, if your bank got into trouble, you went and got your money out of that bank right away because you could lose everything. Well, the COMEX doesn't have any kind of an insurance policy on it. Let it run out a physical with which to pay people who have futures contracts that allow them to demand bullion delivery. And there are people say, oh, the COMEX can never default because they can always settle in cash. It's in the contract. They can just pay you cash instead of markets. If the COMEX runs out of gold and says, okay, we don't have any more gold for your future spot price or whatever, you're going to feel like you got screwed, right?
Yep.
And the markets are going to respond to that as a default, which means the price of gold and silver will just absolutely go through the roof because there will be a buying panic of people who realize that supply isn't there anymore. And if they're going to get any, they need to get it now at whatever price. So yeah, they settle in cash on your futures contract, but tomorrow the price of gold is up by 30%, so you really didn't, and you were expecting to own that gold one way or another and make that profit when it went up. So yeah, that's coming very probably. And one way it'll happen is, or one way that the difference between the physical market and the paper market will be exposed is when there's a difference, and when physical gold is trading for one price in Shanghai and the futures contract price is much lower on COMEX. And then people are going to have to decide which they trust. And I think they're going to trust the physical market when the time comes. So there are some arbitrages there that the big players will attempt, and that might set off the COMEX default, where you buy a futures contract that allows you to take delivery from COMEX, and then you can sell that gold on Shanghai for a higher price, right? You'll do that all day long, and that will bankrupt COMEX. So we'll see.
Certainly makes sense that if you create that arbitrage, like you said, purchase it in the morning on COMEX futures and sell in the afternoon on Shanghai Gold Exchange, then that's going to create some serious problems.
Yeah, it will. And all fractional reserve banking systems go this way eventually. Sooner or later they have a crisis where too many people try to cash in their claims and there isn't enough actual whatever there to satisfy those claims, and then the system goes into crisis. Yep. And we've set it up so that the banks can't, at the cost of us losing the ability to control the value of the currency in which we pay off those claims on a national level. So we have substituted a currency crisis somewhere out there in the future for ongoing banking crises, as you used to have before there was FDIC insurance. And that bought us some time, but at the cost of a much bigger crisis out there when it happens, because a currency crisis is so much bigger than a banking crisis,
Yes.
And that's what we're looking at in the not too distant future, I think. And the European Union are really in chaos right now. There's a movie called Brexit, the movie, that is available online. It's on dollarcollapse.com in the top 10 videos of the week section. And it's an amazing video. It's over an hour long. So be prepared to sit down for a while and watch it. But if you do, you'll see why Brexit is taking place, why the UK might be pulling out of the European Union, because the European Union has become this monstrosity where nobody even knows who their representatives are. They don't have direct elections of people who are then held accountable for their actions. They're basically this dictatorship by a really pampered political class that gets away with everything and does virtually nothing good. And so for the EU to see people start leaving at the same time that the Eurozone is in absolute crisis. The euro is going to have to be radically devalued in order to survive. And so you've got this multi-level European crisis going on. And that doesn't even include the refugee crisis, where millions of people are at Europe's borders and they don't know what to do with them. And so you throw all that together, and the euro is the epicenter of the coming currency crisis. But it might not be, because China and Japan have financial crises of their own that are really epic in scale. By some measures, we've never seen imbalances like those guys have built up. And meanwhile, we're a mess, in the U.S. So exactly. It could happen anywhere.
It could happen anywhere. And doesn't this, what you were just saying about the European Union, doesn't this really tie into what we were discussing a moment ago, as far as, having a hard time understanding why no one's talking about an economic recession or an economic depression? Because everything that we've just described, aside from the precious metals, which is the insurance against all of this nonsense, everything that we've discussed, John, really kind of points in that direction. I mean, in what you just said, as far as the absolute recognition of taxation and theft without representation in the European Union, that is the absolute zenith of everything. I mean, the folks in the European Union, I mean, they have just been abused so on a scale that is just almost boggles the mind. And like you said, now we've got this all of these refugees coming in that are just pouring in. I mean, some have I've heard estimates of up to 10 million people. Who in the world can accommodate an additional 10 million people in the span of a year? No one can. No one can deal with that.
No, you can't assimilate that many people from different
Exactly.
cultures.
No, it's impossible. I mean, and why wouldn't the European Union as a whole? Why wouldn't it? Or is it just slipping into an abyss? Or I mean, what's actually happened? Because in your latest podcast, you had stated that the Italian banks could bring about a massive devaluation of the euro, which you had just mentioned. And I mean, so you combine that with all of these other things. I mean, it sounds like they're just getting ready to implode. And as we pointed out at the very beginning of the show, you've got these changes in the political scene here in the United States with Trump and Sanders in particular, waking up all of these people, just creating this whole groundswell. I mean, it's it just seems like we're on the edge of just gargantuan global change. Or am I misreading this?
No, it feels like that too, and it feels like as you said, the Italian banks could set it off. There are so many things that can go
So
wrong
many
right
things.
now, and they're all systemically dangerous. And so there's no way to know what the catalyst is. The thing that is the first domino in the series. And it could be something that we haven't talked about and that we're not even thinking about right now. There's just no way to know.
That's the scary
And
part.
yeah. But in a way, it's kind of restful because you really don't have to think about, oh, could it be China or could it be Japan? That's a fun intellectual exercise, but it's not necessary to the steps that you need to take to get ready for it. Because just know that something is going to set it off.
Yes.
And then it's going to be a crisis unlike anything we've seen really in human history. I mean, let's not even use the Great Depression as an example, because this is, based on the numbers, so much worse than anything that happened back then. And so that's coming. And it could happen overnight, when it could blow up overseas when the US markets are closed and you're asleep. And so even if you think you have the ability to trade into something like this and see it coming and then prepare then, and even if you think you can, which you can't, it's liable to happen when the US markets are closed anyhow. And so you could wake up in the morning and everything's changed.
Yep.
And all of a sudden your Google stock and your Apple stock are down by 60%, and your S&P 500 call options have just evaporated. Your positive bets on the status quo maintaining for another year or two just evaporate. And so you never had a chance to get out of them and switch into gold and silver and oil and farmland. You just didn't get a chance to do it because it happened too fast. So what you got to do is start preparing now, knowing that this is coming. And, it might not come for years because they do still have some tools to keep things going. And I frankly thought that 2005 was the end of the process back in 2004. I thought we had maybe one more year and it was all going to blow up. So they could keep it going for a little while longer. But when it blows up, it's going to blow up pretty quickly. Yep. So all you can really do is just prepare, get ready, structure your finances so that you actually make out if it happens, and then kick back and relax and watch the show.
Exactly. I like that. Yep.
Yeah.
Get the popcorn on the stove and get your easy chair lined up.
Yeah. Prop your shotgun by the door.
Exactly. Make sure you got plenty of lead and gold and silver and stored food, because goodness gracious, you're going to need it. But we've been speaking with John Rubino from dollarcollapse.com. John, it has been a pleasure. This has been a great show, and I appreciate your time today.
Thanks, Roy. Enjoyed it.
Well, we will talk with you soon, my friend, and you have yourself a wonderful morning.
Okay, you too.
All right.